If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today, we'll be focusing on some significant developments in the EV industry, particularly focusing on Zeekr, one of NIO's competitors, and of course, Geely, whose recent financial performance seems to be making a turnaround. As a NIO investor, it's important to watch what's going on not only for NIO, but also in the connected ecosystem. So this is going to be a super interesting video, super insightful episode. So if you're new to the channel, make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, and leave a comment down below. All your engagement really does go a long way in helping out the channel, helping us to reach a broader audience. So without further ado, let's get into today's episode. So to kick things off, Zeekr released its second report for Q2 2024, and on the surface, things are looking impressive. The company reported a revenue of 20.04 billion yuan, a year-over-year increase of 58%. Their gross profit stands at 14.2%, higher than some competitors like Tesla, XPeng, and NIO. They also delivered 54,800 units, marking a staggering 100% year-over-year increase. But as impressive as these numbers are, Zeekr's facing some significant backlash from its existing customers. Well, why is that? The crux of the issue lies within the recent launch of their 2025 models, particularly with the recent launch of the Zeekr 001, which saw significant upgrades such as hardware and software upgrades. The new model features Zeekr's HID 2.0 driving, which is replacing the old Intel Mobileye driving system and featuring some NVIDIA Orin-X chips. That sounds familiar. We've seen players like Tesla, NIO, XPeng using NVIDIA chips here. The Orin-X chip is pretty popular amongst Chinese automakers. We've talked about it on the channel, but before I get too far beyond the point, let's reel it back in and get back to the issue at hand, Zeekr. So the NVIDIA Orin-X chip is a standard for high-end electric vehicles. But here's where the problem lies. Many of Zeekr's customers who recently purchased the 2024 models feel betrayed, as they feel like they could have waited for the 2025 model. It's like when you buy the iPhone, let's say you buy the iPhone 14, and then you don't know that the iPhone 15 is going to come out fairly soon. It's like, why wouldn't I have just waited for the 15? That's how Zeekr's customers feel. They barely had their cars for a few months, and now there's much more advanced driving technology in the newer vehicles. It's understandable why they feel upset. Their new cars have become outdated in just a matter of months. So this has sparked a wave of public discontent, with many of Zeekr's customers airing their grievances at Zeekr's offline stores and in broadcast rooms. So the situation's a double-edged sword for Zeekr. On the one hand, aggressive innovation and rapid iteration are what keep them competitive in this cutthroat market. On the other hand, making moves like this risk alienating their loyal customer base, which could have long-term repercussions on their brand and reputation. For NIO, I think that this presents both a challenge and an opportunity. The challenge lies in the fact that Zeekr's rapid advancement could put pressure on NIO to further accelerate its innovation cycle. However, the opportunity here is for NIO to differentiate itself by building stronger, more lasting relationships with their customer. NIO has always emphasized community and a customer-centric approach, exemplified by initiatives like NIO Houses. By continuing to prioritize customer satisfaction and customer loyalty, NIO can avoid the pitfalls that Zeekr is currently facing. One of the major talking points from Zeekr's recent report is the shift to more advanced intelligent driving systems. Zeekr 001 now features the NVIDIA Orin-X chip, significantly enhancing its driving capabilities. This upgrade's crucial to intelligent driving and has become a key differentiator in the EV market, especially for vehicles priced above 20,000 yuan. If a car in this segment doesn't offer intelligent driving capabilities, it's unlikely to compete effectively and competitively. To put this into perspective, let's compare it to NIO. For instance, the NIO ET5 boasts a computing power of 1016 TOPS, which far surpasses Zeekr's previous models. So this is obviously a clear advantage for NIO, especially as the market increasingly values these capabilities. However, the rapid advancements from competitors like Zeekr and the entry of tech giants such as Xiaomi and Huawei into the EV space emphasize the need for NIO to continuously innovate. For NIO, this isn't just about keeping up, it's about leading. NIO has already established itself as a frontrunner in intelligent driving, but the competition is obviously getting fiercer day by day. The recent success of Xiaomi and Huawei in this space with their advanced intelligent driving system underscores the urgency for a company like NIO to stay ahead. Beyond just technology, NIO needs to maintain its focus on, of course, the end user and customer loyalty. The backlash against Zeekr shows that tech alone just isn't enough. How you treat your customers matters just as much. Switching gears, let's talk about Geely, Zeekr's parent company. Geely has recently made headlines for its remarkable turnaround. 2 years ago, Geely was overtaken by BYD as the #1 domestic automaker in China. However, it appears that Geely has clawed its way back, achieving a net profit of 10 billion yuan. This resurgence is largely due to their investments in new energy and, of course, its continued expansion into high-tech automotive solutions. This turnaround is significant for several reasons. Firstly, Geely's position as a major automaker in the market. Secondly, it ensures continued support for Zeekr, which is crucial given Zeekr's ongoing losses despite continuous revenue growth. Geely's financial health directly impacts Zeekr's ability to continue to innovate and compete in this market. For NIO, Geely's resurgence is a mixed bag. On the one hand, a strong Geely means a strong competitor in Zeekr, and obviously NIO has a partnership with Geely as well, but we're not talking about that right now. At the end of the day, these companies are still competitors, but on the other hand, it's a reminder of the importance of financial stability in the industry. NIO has a robust cash reserve, but is not immune to the pressures of the competition and, of course, market dynamics. Geely's success serves as a benchmark for what's possible with the right strategy and execution. For NIO, the takeaway here should be the importance of balancing innovation with financial prudence. As we wrap up, it's clear that the EV industry is in a state of rapid evolution. Companies like Zeekr are pushing the boundaries of innovation, sometimes at the expense of customer loyalty, while others like Geely are proving the importance of financial stability. For NIO, the path forwards involves not just keeping pace with these changes, but also leading them. By continuing to prioritize customer experience and maintaining a strong position, NIO can solidify its place as a leader in the EV market. Thanks for tuning into today's episode of the Courtside Financial Podcast. I hope you found this valuable, insightful, helpful, at the very least entertaining. If you found it to be any of those things, make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, and leave a comment down below. Like I said at the beginning of the video, that all really does go a long way in helping us to reach a broader audience. So this is Obi signing off with the Courtside Financial Podcast. I hope you guys all have a good evening, good night, wherever you are. Thanks for tuning in. Bye.